Alright, good evening. It's Tuesday, September 19th, 2023, here at PreciseAlgorithmTrading.com, and I'm going to start here with our automatic trading system. And this is the Dow. Um, the Dow Futures, and we got a nice little pop back up into the zone over here of where the uh, high equity peaks are here lately, and so possibly primed to maybe take off, hopefully. And this is what the individual trades look like today down here 919. So the way this system works is you literally turn it on, turn it off. It trades through the day. You monitor it, monitor it so that it um, make sure that it's doing what it's supposed to be doing, which is just trading in and out. And then at the end of the day, you take a look at your profit and loss. Here's the Russell, and this one has been, not near as good for this whole time uh, since March. But if you look at it on the longer term chart, it's still just fine. And its trades today, it just had one for minus 135 bucks. So you can see there's a lot of losses here in the recent action. Um, One of these days it'll come back. All right, here's the Nasdaq, and it's doing pretty fine. It had a pretty big pullback here lately, but that is a nice little kick back up today. So um, you have to, if you notice, this is the type of action that you have to be able to take back off again. So tomorrow is Fed day, and so the Fed comes out at 2 p.m. Eastern Standard Time and tells us what they're going to do with the interest rates, and that's usually just enough to make volatility regardless of what they do with the interest rates. So, and here's what our charts, or here's what our actual individual trades did today. So this is actually a little lesson. This is what the first trade did today, and if you're watching this, you just can't give up, because at the end of the day, uh, between those three trades, I think you got your money back, and then that one, obviously, the big one there, tacked on, and it's a nice winner for the day. So you just can't give up. I mean, that's the literally looking at the long-term picture of what's going on. It matters the most, especially when you get a big pullback like that one. That is not easy to take, and you got to have the right risk management in place to be able to handle it, and you got to believe in your system for one thing, but you just have to understand the math. All right, we'll flip into Thinkorswim here, and we'll look at the individual markets. So here's the S&P 500. Not a big move on the day, but in the scheme of things, I mean, it was enough to mix some things up. We got that's a doji, dragonfly doji, or it's basically a mini hammer candlestick, but not really. But in any case, the price went all the way down there and all the way back up within the course of the day. We have down arrows showing up on our indicator on the daily, and that is the main driver. So if I was in this position, I'd get out, or I'd set a stop. And we breached this pivot right here, which means this is the next pivot to go. That we could get a bounce, and as long as we get a pivot over in this area right here, we could still go on and make higher highs. But as of right now, we've got a high, a low, which is also a higher low, a lower high, and if we put in a lower low, which technically speaking that's what this is, um, that is a potential. I mean, it could be a bull flag pattern and take off from there. Usually I would expect it to last a little longer, and since we just got this down mark today, I'm expecting at least some more sideways volatility. And it looks like we could go really a lot farther down on the weekly chart, but really it's green up here, and we are, I mean, for sure, it sure looks like sideways. So here's the Dow, which actually looks like it's been brought down to earth, and now we could really rally out of this a little bit, possibly easier, because we've already done all the work to the back to the downside. Now we just need to take off again. And it's pretty significant to me that we're inside the Harvard lines. Oh, I don't know how I messed up. I had the Harvard lines on the weekly chart yesterday. I need to put them back on. I think they're handy. That price action is just walking inside of the Harvard lines. It's interesting. So the Russell actually took out these previous pivots back here. Now we're looking at these pivots back in this area here to possibly hold us larger support. And if they don't hold, then I'm thinking we're going all the way back down here again. And that is a head and shoulders pattern. If you don't see it, I'm going to mark it out. Now the good news is I've seen this act before. Anybody that understands and follows, so here is a shoulder, there's a head, there's another shoulder, and if that's the neckline right there, the target is the same distance to the downside, which puts you right in there, maybe even a little further. But again, I've seen this before, and I could pull it up on a previous chart of the S&P 500 where everybody saw that coming, and it just took off and negated the whole thing. And we won't really know that we negated the whole thing until it takes out that pivot right there. But if we actually take out that pivot right there, we could be, that's a pretty good indication. So the neckline being there, literally you take that to the neckline, and then you just take it all the way back down again, which gets us below this previous support, by the way. Alright, what's the NASDAQ doing? Alright, the NASDAQ also has a nice little tail on it today, but we've also got sell signals on the daily. So this is a pretty significant move down, and if I wanted to, I'll go ahead and do it. I'm going to draw in the way I see this unfolding here. This is supposed to resolve itself inside of by the time it gets to the apex of that triangle, and anything can happen. You know, there's two things in my opinion. We're going to pop out of this thing to the upside pretty severely, or we'll pop below it, get a head fake down, and then come back up. But that's just my read on what's going on here. This is typically, I think, a pretty bullish indication with that triangle pattern set up the way it is. And we got 52-week highs right up here. Unless the whole thing just falls apart and we go, you know, maybe all the way back down to here, but that would be one heck of a crash. We're awfully close on the Dow. Like I say, 52-week highs here. So the high on the Dow is 36,952. The all-time high, I believe. So, yeah, anyway, let's keep going. The IYT, I think it fell apart today. That's the transports. Well, not terrible, not terrible. One wave down, two up, three down, four up, five down. This thing looks like it wants to rebound too, and we are oversold. Okay. And then oil. Of course, it's going to give me fits. Alright, I'm just going to flip over to stockcharts.com. Alright, maybe not. So oil actually put in a blow off top potentially here, candlestick, and we'll just have to watch that. I really am going to look for the signals to form here for this to go back down again. If it comes down and then back up again, you could actually short it at the pop back up, especially if by then these things have crossed over. Or you could just wait for it to pull all the way back and give you a new buy signal. Because now we're above these lines. I expect that we've got this much room without really destroying anything to do with this uptrend, the new uptrend. Alright, that's enough for that. Let's flip to stockcharts.com and type in our bullish percent index. Just type in bullish and we get all the percent indexes. And here's the industrials. Put on a new O today to the downside, minus 6.67%. NYA, minus 0.92%. The transports didn't change. The NASDAQ, minus 0.86%. The SPX tacked on a new O today, minus 2.43%. And the NDX. Did I say OEX? No, the OEX down 3.7%, and then the NDX, it didn't change. So that's interesting. So tomorrow the big news is going to be the Fed. So either tighten your stops or understand your risk. That's where you need to be. Till then, take care, good trading, and have a great night.